Good evening, dear colleagues. As always, it's Sunday, as always, the ForexTimes project. And I, Dan Strelkov, as always, today we will consider the probable movement of several trading instruments. Namely, it will be the euro, gold, and gas, specifically natural gas. Dear colleagues, I invite you to the community ForexTimes. From tomorrow, I am starting the publication of a very large number of forecasts on Elliott waves. Naturally, daily, every morning, every day, I publish forecasts based on the data of the Chicago Mercantile Exchange and the U.S. Commodity Futures Trading Commission, based on the expectations of professional participants in the Chicago Mercantile Exchange, the largest exchange in the world. This is for 9 trading instruments every morning. And of course, trading signals, trading recommendations. Please come to the community ForexTimes. Don't miss very good market entries. Well, let's go, starting now. So the euro dollar initially, of course, we will look at what the data from the Commodity Futures Trading Commission shows. We see that the trend is still upward, but the decrease in buyers by 32% hints at a continuation of the decline. Let's see together what is the probable market structure at the moment. Namely, we see a fairly decent upward movement. And at the moment, we have a descending movement in the form of a correctional structure, and this correctional structure, how it can continue further. Unfortunately, I will gladly tell you, it could continue to sell further, but I unfortunately will not say that. Namely, now I will explain why. First, we will look at the structure, say wave A, then the correctional wave B in the form of a plane, and a continuation of the decline in the form of a probable wave C. And here, excuse me for a moment. Now, let's consider how to catch the most ideal option. That is the rise of the trading instrument throughout Monday and Tuesday to the week's balance level, and the level of accumulation of option contracts for weekly options with a contract value of $246 million. The formation of a selling pattern and selling with the goal of accumulating option contracts. Let's deal with the levels. The level 108.30 is good for selling, and our target level is 106.85. After that, most likely, if it happens, we will consider buying. Why? For the simple reason that the price will break the strongest support range, namely the level of the path with their premium levels. Premium levels, as you know, are levels at which futures contracts for purchase are likely to open with maximum volumes, plus the loss level of the market maker. And you know what a market maker is. He protects his levels so that we have a lower level and we have an upper level. These two levels create a range. Of course, these levels change every day, but insignificantly. And if the price goes beyond this range until expiration, and these are our weekly option contracts, then until Friday evening, the market maker is very desirable to return the price to this range. Therefore, dear colleagues, again on Monday and Tuesday, in case of a price increase to the week's balance level, we consider selling with the goal of accumulating option contracts for $123 million at a level of approximately 106.80. If this scenario does not succeed and the price simply falls to the level of $123 million during the week, then we will consider buying. And I explained why. For the simple reason that the market maker is likely to start protecting his money. Gold, dear colleagues, is still quite interesting here, and honestly, it's not fun at all. The point is that we have movement and there is a correction going on. The thing is, at the moment, we don't quite understand what to do with this correction. Okay, let me put it differently. I don't really understand what to do with this correction, and I'll explain. What's the point? The point is in this triangle. The triangle, in principle, is quite obvious here, but it's not very clear how to work with this triangle. Either we work it down, meaning we have a zigzag in wave A and a triangle in wave B of a higher order, and we go to wave C. Or, on the contrary, this entire triangle is worked out upwards. This zigzag is already a component part of the triangle with waves A and B, and the triangle just flies away now, upwards, with a shout. You may notice that actually up and down are not very clear, and the increase in buyers by 5% gives us only one thought. What is it? The thing is, here we see the strongest support range of option heads, with their premiums, the market loss level. You can also see a huge accumulation of option contracts, more than $800 million. This level can play for us. A very interesting moment, and therefore, dear colleagues, if by Monday or Tuesday, the first half of Wednesday, the price reaches this level, nothing other than a very strong psychological level of $2,000, and a buying opportunity arises, we can decide on purchases in the direction of the week's balance level. For the simple reason that most likely with call options and their premiums, and most importantly, market makers will be protecting their positions. This is the scenario for gold in the upcoming week from the point of view of Elliott wave theory. From an Elliott wave perspective, you can sit back, relax, and metaphorically smoke bamboo, just wait. In which direction this triangle will shoot and how strong it will shoot. The reason being that we know the triangle is the penultimate wave. Therefore, if the triangle being the penultimate wave shoots upward or downward, it doesn't matter to us. It doesn't matter much, because if the triangle shoots upward, we start accumulating sell positions. If it shoots downward, we start accumulating buy positions. That's the whole task. And dear colleagues, as I promised, let's talk about natural gas. I apologize for today's terminal issues. So gas is currently continuing to fall, and it has been falling for almost a whole option, making it unclear what to do with it and when it will stop. However, the fact is that gas has already reached a very strong support range. I will show you all of this now. Gas has reached a very strong support range in the form of put options with their premiums, and further decline is possible. Specifically, during the last week, professionals threw us around 7 million put option contracts at the level of $1.75, and at the level of $1.50, we have 176 million put option contracts. These are two levels at which decisions can be made. I hope the price doesn't stop here and market heads can't protect their money, so the price will drop further to the $1.75 level, where I will start accumulating buy positions. I will start accumulating buy positions at the level of $1.75. If the decline continues, I will start accumulating buy positions at the level of $1.50. But of course, from an investment standpoint, gas should be considered for buying because hypothetically, gas can grow. You can see where gas decreased, and it has been in the accumulation stage for a long time. Insane volumes are already accumulated here, and you can see that option contracts, millions are anticipating the growth of this trading instrument. Therefore, for natural gas, we consider buying from an investment perspective. However, currently, by the way, even according to the data from the Commodity Futures Trading Commission, where we see an increase in sellers by 5%, we are still observing how this trading instrument will decline. But in our minds, we keep thinking about buying, and buying. Thank you very much, dear colleagues. Once again, I remind you about the ForexTimes project. I am Den Strelkov, inviting you to the community. Don't miss the chance for very good market entries. If you need any answers to your questions, you can always come to the community and ask me questions every evening. Every morning, I set aside time specifically to answer all these questions and talk about wave theory, patterns we use, when to consider entering the market, and when it's better to abstain and take a break. Thank you very much, dear colleagues. Have a great evening, everyone. Goodbye.